Hello and welcome everyone. Today we are diving into one of the most essential pillars of Indian tax system, that is tax deducted at source or TDS. Whether you are a business owner or a salaried employee or just someone trying to decode the tax maze, this session will give you the clarity and confidence. So let's start. Introduction to TDS. So what exactly is TDS? Think of it as government way of collecting tax right when income is generated before it even reaches to your bank account. It's like a financial checkpoint that ensures taxes are paid on time and transparently. From salaries to rent, interest to professional fees, TDS touches almost every transaction. And trust me, once you understand it, you will see how elegantly it keeps the system running. Applicability of GST. Now, who need to deduct TDS? It's not just a big corporation, even individuals or a HUF, if they comes under a audit, must comply. This rule is simple. If you are making a payment that falls under a category of TDS and it crosses the threshold, you deduct. Whether it's a freelancer you hired or a rent you are paying, TDS could be knocking at your door. Criteria for TDS. Let's break down the criteria. First, nature of payment. What are you paying for? Then, the threshold limit. How much you are paying? And of course, the rate. How much TDS should be deducted? And don't forget the PAN. If your P doesn't provide it, the rate should up to 20%. And that's a steep price for missing paperwork. Categories of TDS. Here's where things get interesting. TDS isn't a one size fit for all. Different payments fall under different sections, like salary, that's section 192, rent, section 194I, professional services, that's 194J, and yes, it's whopping 10% unless it's technical, then it's 2%. There is even a section for cash withdrawal, 194N. The point is, know your section, know your rate, and you are golden. Due dates for TDS compliance. Deadline matters. Miss them and penalties start piling up. TDS must be deposited by 7th of the next month, except for the March that's due by 30 April. Returns are quarterly and certificates like form number 16 and 16A have their own timelines. Make your calendar automate reminders and whatever it takes to stay compliant. TDS compliance checklist. Here is your cheat sheet. First, get your TAN, then deduct TDS correctly. Deposit it on time and file your return. Issue certificates and reconcile everything with form number 26AS. It sounds like a lot, but once you build a system, it becomes second nature. And yes, digital looks makes this way easier. Consequences of non-compliance. Let's talk about what happens if you slip up. Interest start ticking at 1% for late deduction and 1.5% for late deposit. Then there is rupees 200 per day penalty for late filing. And if things get really bad, then there is a prosecution. Plus, your expenses might get disallowed. Moral of the story, don't mess with the tedious deadlines. Let's wrap it up. TDS isn't just a tax, it's a system that keeps our economy honest and efficient. Deduct on time, file accurate, and use digital tools to stay ahead. And if you are even unsure, consult a tax expert because when it comes to taxes, being protective is always better than being reactive.